I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of the In It to Win It show. Thank you so much for being here. Great to have you as always.
It's great to be here, Charlotte. Thank you.
Of course, really good to be catching up with you. And usually we start with gold, but I thought today it would be appropriate to begin with silver given the price activity we've been seeing lately. So I'm hoping you could start by breaking down the breakout that we've seen in silver. Tell me what you're seeing in the charts there.
Okay, let me share my screen here, and we'll get right to it. Very, very exciting on the on silver. You know, especially for longtime investors that have just been in this for a while. It is fantastic to see that we are hitting new all-time highs. So let me just back up the chart here, and we can all relish in this for a moment. So back here, 1980, you know, basically hit $50 intraday, but where it actually closed here, you can see that there's a trend line that connects right over here to the 2011 high, and then it strung all the way over here to present day, where we got a topping of it right there on the October bar. And then we blew through it here on the November bar. And if I go to the weekly here, we can see that it hit there, and that it also hit here the second week of November. And we finally had a convincing break above it at the end of November, which was really cool because we had an all-time weekly close high and we had an all-time monthly close high. So this is a confirmed breakout. We're in new territory here. Which is fantastic. Now, if I go to the daily bar here, we can see that in the very, very short term, we have a parallel channel right here that has so far just been obeyed, right? And this is going back until basically the Liberation Day sell-off, right, around mid-April. And it's just kind of stayed in these channels, and you can see that it's hit and obeyed it pretty well. So what I see at least for the immediate term for silver, I wrote down 56.85 right here. And what that comes in is this bar right here hit a low of 56.85 on the futures market. And then this bar 3 days later hit at a low at 56.85, a perfect double bottom to the penny, right? I don't believe that's a coincidence. I think that's a number that everyone should just kind of keep in the back of their mind. And it certainly doesn't mean it can't be broken, but for it to hit like the penny, to the penny on that, there were traders that were looking for that, and that's where they had their order set, and so they bought as soon as it hit it. And I think there could be traders that have that same exact number in their in again. And so if there's a trader out there that wants to take advantage of it, I think that's the number you need to be looking at. Now, where do we go from here? I went over this in my weekend show, and so there's three ways that this could go, right? The silver price could go up, it could go sideways, or it could go down. And what are the probabilities that I'm assigning to each one? I would say with this setup right here, there's probably about a 20% chance that we go down from here. And by down, I mean breaking this 56.85 level. And then our first level of support right here is going to be about $54. And that's just that white trend line that goes back forever, like 45 years, right? Okay, so that's your first initial support right there is going to be $54. And then after that will be this bottom part of this parallel channel that so far has been obeyed for about 6 or 7 months, right? I think that there's about a 20% chance of it going down, breaking this, coming down to this level. And after that, if it breaks this parallel channel, we'll have to have a discussion there. But I think that's kind of a low probability, maybe only happening 1 out of 5 times. Now, about 3 out of 10 times, 30% of the time, I think we kind of go sideways here in what's forming up to be what's called a bull flag. And so if a bull flag basically looks like a pole going up, and then it kind of looks like, everyone knows what a flag looks like. It looks kind of like that. Ideally, you want this angle to be 90 degrees, but that's basically, I think, the formation that we're starting to see in silver here. See, we've got the pole going up, and then we're starting to get the flag forming out, right? Now, ideally, as silver investors, I think we want to see this go sideways for a little bit longer. I think we want to see this build up. And all this is just people that bought down here. Some of them are taking profits. They've got, options contracts that are expiring. They're selling. It's getting down to this point, this 56.85. Other people are buying it up. And we just want to see this kind of grind sideways. And in my opinion, do this for another 1 or 2 weeks before the next leg higher. Okay, so that's scenario number 2. I see that at about 30% chance, and the other 50% chance here, I think we just move up. I think this does not end up being a full, mature bull flag, a long time scale. It's just it's a toddler, right? It's just going up here. Right here in the next few days, we break up above this trend line, which when that happens would act as support, and then we're off to the next levels. I could put out some targets if you want, going up to the next levels, but those are basically the 3 things that I see. 50% to the upside, 30% sideways, 20% down.
I think that's a great summary of what we have going on in silver. And I like that we look at those 3 different scenarios with the probabilities. I think it would be good to look at some of those price targets upward that you had in mind, especially as we're heading into 2026. We're about to kick off the new year.
Okay, sure. Let me get rid of some of these lines here. And all I'm going to do is I'm going to use a tool called Fibonacci extension. And what we'll do is we will take a very, very long-term approach here. And so I kind of like to find extremes on the charts of when I use these extensions, because it's much easier for me to say that, oh, the next level of support is 54, because every trader on the planet has that white line that I just drawn on there, right? So that's very easy. Going into the future is a lot more difficult. And it's a tool that I like to use here on TradingView. It's called Fibonacci extension. I got this one from Chris Vermeulen. And basically all you do is you take a big low, and then you take the next big run up, and you simply string it out. And you'll see that there's some very distinct lines that come in here. And I don't think it's a coincidence that there's a lot of price action around where each of these lines hit. And so you can see that each one of these has kind of acted as a little bit of resistance or a little bit of support for each of these legs. We've just blown through this last one here. This would be the 200% retracement. It was around $54. And you can see, I don't think it's a coincidence that it took a while to get there. That's where traders were taking profits. They had the same white line drawn on our chart that they do on theirs. So the next one up that I see is going to be the 2618. And that is going to be right around the $65 level. Maybe 65.50, somewhere in that ballpark. I think that'll be, if the 50% one plays out and we move up to the next leg up, that's kind of where I see it. Somewhere 64, 65 bucks in that range. I think that'll be where people will start taking profits again.
Okay, so that can be a point that we can be looking out for. I also want to ask, I know you're focused really on the charts and technical analysis and what that can tell you, but with this move in silver, we've been having all these discussions, I think, online about the Comex disruption that happened toward the end of, not this past Friday, but the one before. And I'm wondering if you have any thoughts on whether that's playing into the move in silver, anything that's on your mind in that regard.
Not really. I don't follow that as much. The only way I really follow it is looking here at the futures price of silver, 1 month contract out, and then I'll look at the spot price of silver. And then this is basically the futures price minus the spot price, which essentially gives us a spread. Okay. And so this is kind of how you can visually represent that, is if the spread is down here, then that means that people are paying more for spot silver, for silver right now, than they are paying for silver going into the future, which is kind of odd, right? Like, silver should be more expensive in the future than it is now. There should be more inflation. There is cost of carry, meaning that, like, no one's holding this stuff for you for free. You have to store it. There's storage issues. So it should be up here most of the time. And most of the time, if you kind of zoom into this, it is. But there's these moments where you have this radical swing one way or the other. And I just put these lines here to kind of show that as time goes on, because this chart goes back into the 70s, right? As time goes on, the swings have gotten bigger, probably just because the price of silver has gone up with the more dollars that they print and with more inflation. But that's about the only way that I'll catch something like that. And usually what happens is when you have a swing back here in the backwardation, that's usually kind of when you're going on the next leg up. That's when it's telling you that there's a shortage somewhere, that for whatever reason, traders are willing to pay more now for silver than they are for silver a month or 2 months or 6 months from now.
Well, that's a really interesting angle to look at. So thanks for going through that. And I think I have just one more question on silver, which is I'm wondering how are we seeing the silver stocks responding to the move in silver that we've seen? I know typically we hear that eventually the silver companies will outperform the price. So is that playing out at this point, or what are we seeing?
Oh man, yeah, it's looking absolutely fantastic. Okay, so here's SILJ, right? Let me go to the daily here. Yeah, so we're probably like most of your listeners, we're just buying this stuff when no one cared and it was hated, and we've recently been putting on some sell orders. But I did something recently. I bought back in. Right. So it took a lot of profits. Silver kind of had a little correction. And then we had that breakout. And what was beautiful about this was silver went up to a new all-time high. And you can see SILJ, the junior silver miners ETF, did not, right? I think the miners are going to play a little catch up here. And I'm not usually in the habit of buying up at the upper end of the charts. Like most of my buys are down here when the RSI is really low, and I'm not in the habit of buying when the RSI is up here in the 60s. That's not something that I'm used to. But when I see it on a chart like this, it's pretty compelling. And also right here, we have what could be, we'll see if it comes to fruition or not, but this is called a cup and handle pattern. And so it comes up. Now, it's not perfect, okay? But it comes up like this, basically forms a cup, and then we form out a handle. And some of the stipulations here, you want this in an upward, you want this in a bullish pattern. It's got to be in a rising price action. It forms out a general cup. This is not ideal how it has that little kind of spike right up there. It'd be much better if it was smoother. But no pattern is perfect. And also what we want to make sure is that this pattern does not retrace further than the 50% Fibonacci retracement. So we're well above that right now. Ideally, we want to see SILJ come down here to the $24.30 level and then bounce up. And as soon as it clears this spot right here, we'll call that $26.70. That's when you buy. That's the breakout of the cup and handle. I was a little early on that. I guess I got a little trigger happy, but I think this is going to do very well. I'm not concerned that we're going to have a breakdown here at all. The level you do not want to see this get past is $23.60. If it gets past that, this cup and handle pattern is broken and all bets are off. But as long as we're above that, then we're fine. And you want to bet the breakout right there.
All right. Well, glad I asked because I think that gives us a good idea of your mindset there. All right. I think we've done a pretty good job covering silver. So let's move over and take a look at what's happening with gold. About a month ago at this point, we were both at the New Orleans Investment Conference, and it felt like a lot of the conversations at the time was that gold was maybe going to have a longer or deeper correction after the big move up that it had in October or so. And we haven't really seemed to see that. Gold it's kind of continuing to move along. So I'm wondering how you're looking at gold right now. Could we still get that pullback, or how is gold setting up for 2026?
Yeah, I think that the pullback still could happen. If I bring in some of my moving averages over here, in the back of my mind, I'm, what's the word? I guess a little cautious in that it could come back during most bull markets. It comes back and it touches somewhere around the 200-day moving average, which is way down here. It's rising every day. But today it's at 3,500. Okay. Now that level does line up very nicely with a lot of support back here when we were building that sideways action bull flag for a long time. 3,500 lines up with a lot of price action support. On top of that, the 200-day moving average. In the back of my mind, I'm always thinking, okay, that's the low, right? That's the floor, I should say. I don't think it'll go lower than that. So that would be my extreme downside target. But every day that goes on makes me more and more confident that we're not going to hit that. We may come down and hit the 150 moving average, which would be around 3650, somewhere around there. I could put it in if you want. But basically what I'm seeing right now today is this looks like bullish consolidation to me. See, so we came up right here, the high of this bar. So we went to all-time highs. We'll just call it 4,400. It was $4 short of that. Came up, then hit right here on this on November 13th. And the high there was 4,250. And then we came up right here and we closed Friday and broke it. Okay. So we went just a couple bucks above that and we went to 42.63, right? So $13 higher. Went up, kind of sideways consolidation here. And what this is it's just buyers and sellers just taking profits. What we need to see a breakout here is we obviously have to break this white line, which is the all-time high. But this pattern that I'm seeing right here it's not really a bull flag. See how this angle is a little bit more than 90 degrees. So I think you kind of have to negate that for a bull flag. But it does look a bit like a pennant. If you got the pole here, it's kind of like that, a little bit more of a triangle pattern. And these tend to kind of bounce between each other before it resolves one way or the other, usually kind of violently so. So I think in the next, maybe few weeks or so, we're going to get a resolution of that. My bet's on the upside though. I think that generally speaking here, we have a bit of a, kind of a longer term triangle right here. And, usually when the pattern forms up like this, see right below it, we've got the 20-day moving average for support. We got the 50-day moving average for support. My money's on up. I would not be shorting gold here.
Okay. And I think you answered my question, which was going to be, what do we need to see in order to know that the next gold breakout is coming? Another point I wanted to ask you when it comes to gold and silver. So we're seeing silver moving right now up and gold is kind of continuing along sideways. What is that price action telling us about where we are in the precious metals bull market right now? Because, typically you hear that gold moves first, then silver comes along and it starts outperforming. So any thoughts on that?
At least in the middling stages, we've had the move in gold. We've gone from, the cup and handle breakout of 2,100 and, we've gone all the way north of 4,000. So now silver's playing catch up. I'm not really concerned that we're like at the end yet. I think we have a long way to go. If you look back at past gold bull markets, the average is like an 8x. We're at a 4x right now from its low of 1,000 in 2015 to, 4,000 now. Okay. I think we still have some more time to go. Another thing, and we are starting to see precious metal sales in Costco and, things like that, but there's not the real fervor. There's not the kiosks in the mall that I'm remembering, at the last gold bull market where they're selling, gold in kiosks in the mall. People aren't talking about it. You know what I mean? Like you want to hear people talking about gold like they were talking about Nvidia and Tesla and tech stocks a year ago. That's the time that I think we need to get out. Another one you could look at is this gold to silver ratio. So I think this will also be kind of telling. And I drew right here. So this is just gold divided by silver. Right now it's at 72. So that simply means that you can trade 72 ounces of 72 ounces of silver for 1 ounce of gold. And in the immediate term right here, I see a little bit of a bull flag pattern. So I think that silver is going to continue to outperform gold. And all it is just the pattern that you saw. And you just take the pole of the bear, there's a bear flag, pointing down. And then you project it to where the breakout would be. So we could get down to a ratio of 62 to 1 in pretty short order. Usually these flag patterns resolve pretty violently. And what is pretty interesting is right here, back in May of 2024, so a year and a half ago, we were at this ratio. So it's been a while since we've been down this low, and silver has been outperforming gold to such a level. I'm not looking to be out of precious metals until we get to a ratio that is like 45 to 1 will kind of be my alarm bells should be going off in our heads. Like, hey, we need to really take some profits in this stuff. Maybe even contemplate selling some physical. But definitely pressing the sell button, in the stock market for sure.
Yes. Good context there. And probably now is a good time to take a look over at the S&P. You mentioned there's some interesting things that you're seeing there. So I'm hoping we can go over that as well.
Yeah. So this one looks like a kind of a topping pattern to me. And this price bar right here, a high of 69.20. Every day that goes by, I'm becoming a little more confident that this will be the high in the stock market. This looks to me like we're just kind of, when you get into the futures and you look at the very microscopic parts of this, it's kind of like when news comes out the institutions will buy it up because they know that retail's coming in, and then they dump it to retail as soon as it opens. So this chart doesn't reflect that, but it looks to me like retail is the one that is buying and institutions are the ones that are selling, and we haven't made a new all-time high yet. On the other side of the coin, this is a relatively bullish chart. I mean, you have all the moving averages in sequential order, but when you kind of look behind the scenes at some of the tech stocks, like NVIDIA, for example, okay, so they made an all-time high, but this pattern that I'm seeing in NVIDIA, which makes up a lot of the S&P 500, maybe your viewers can already see this right now, but we're starting to form out what is looking like a bear flag. And if some of the tech stocks are starting to go, I think that's going to bring the general market down with it. So I would be cautious if I was betting on the S&P 500.
Well, we'll definitely keep an eye on that. We'll check back in with you next time we talk and see how that's looking. I want to also touch on copper with you today as well, because I remember that was your pick for top performing asset of 2026. So definitely we should take a look and see how copper is setting up for next year.
Yeah, so far copper's been doing fantastic. Okay, so this is on the Comex. So this is futures price in New York. And I'll just zoom out here long term. This goes back to like 1980s. And we can see, well, let me undo that. There we go. Okay, we can see that we're breaking out right here. Now, kind of a pincer like a pattern right here, meaning that just increased general volatility until it breaks out one way or the other. But what we're seeing right here is I'm kind of giving this part right here a hall pass. This was when Trump came out with his tariffs, and he just kind of said in passing, oh yeah, we could put a 50% tariff on copper, no problem. And the futures market just went haywire for a couple of weeks, and then we came back down. So I think the way we should interpret this chart is not so much paying attention to this. And if he had not said that, this chart would basically look something like that, and our moving averages wouldn't have gotten all over the place. I guess what I'm trying to say is that I think we're at all-time highs here in copper. I'm not counting this anomaly right here. I'm giving it a hall pass, and I think we need to look at this as copper is breaking out to new all-time highs. We can look over here in London. Now, this one's a little bit different. It prices it in American dollars, but they charge it by the ton, so you got to divide by 2,200. But you can see here that this is the same thing. This is going all the way back to 2011. Boom, boom, boom. New all-time high. Undebatable breakout right here. And it doesn't seem like anyone cares. So I think, if you haven't been in copper yet, I think you should definitely get it now. As a commodities investor, you kind of have to wear two hats. You got to be this guy right here, right? That is buying down here when no one cares and when it's hated. Right? And then you also got to be this guy right here that's like, oh, hey, we were right. Breakout central, and you got to be willing to press the buy button up there. There's kind of two skill sets that are almost contrasting with each other. You know what I mean? You got to buy it when no one cares, but then you also got to be willing to take that leap and buy into copper equities when it's breaking out to new all-time highs. And I think that's where we're at right now with copper. The one caveat is that everyone's been talking about for like the last 3 years is the recession, and copper always gets hit with the recession. I don't know that we're going to see that now. I mean, central banks around the world are cutting rates. They're probably going to print into oblivion. Maybe they can kick the can down the road and we don't see a recession for another few years. I don't know. So some of the big copper mines are having troubles. Like our supply has gotten coming out of the ground has gotten lower over the last several months, especially with the Grasberg mine. I mean, who knows where that's going to go? We may not have a pullback this one. I don't know. And I think, this is kind of one of those moments where if you find yourself now and you're like, I don't have any copper in my portfolio, I don't think it would be a mistake to take, let's say you have a $100,000 portfolio and you want to bet 10 grand on copper. I do not think it would be a mistake to place $1,000 or $2,000 worth of that 10,000 now. I really don't. And this is an easy way to do it. COPX. This is just an ETF of copper miners. I think just about anyone can get this one.
Again, I think you covered the question I was going to ask you, because it is that recession cloud that seems to keep hanging over copper. So good to get your thoughts on that as well. And I want to make sure we take at least a brief look over at what's happening in uranium. It seems it's a favorite of our audience for sure. It seems to be in this holding pattern. And I wonder if you see any change coming to this sector as we're heading into the new year.
Okay, here's the spot uranium chart. Now, very, very low volume. The only thing I really see on this chart and what we got to go by here, let me get rid of this and make it a little easier to read. I'll make it a line chart so everyone can see it better. But basically what we've got here is we've kind of got a triple bottom. And so that's where you get the price right there. And third time's a charm. I think we're about to go up. So I think uranium equities over the next couple of weeks are probably going to go higher. And some of the common ones here that I think most people bet on, this is SRUUF. This is just buying physical uranium on the stock market. I like a buy on this one. I want to catch this rising 200-day moving average, right? And I think we're about to get, maybe a little sell-off here in the uranium equities. So I like this one kind of around $17.25. Like, set a limit order and then be happy when it fills. And I think over the next year or so, the spot price of uranium is probably going to go from, $76 up to maybe 90 or so. And you can play that here. If you want a little more leverage, you could do that here on URNM. So this is just the ETF that has Cameco, Kazatomprom, Sprott Physical Uranium Trust in it, and then a whole bunch of juniors, right? And this one is amazing. I mean, been really profitable. If we just go back over here, you can see these bull runs, like this one right here from 2021, just a few months within that one went up over 100%. And then this one over here, it was just boring for, several years. And then had over 100% move. And then recently we've had 145% move when it just got stupid cheap down here. This was on Liberation Day, when Trump held up his chalkboard with all the tariffs. Baby thrown out with the bathwater. Click the buy button, trim on the way up, and now we're starting to do it again, right? So uranium's one of these ones that I just love to trade. I love to be in and out of it, and I think it can be highly profitable, if you just pick your spots. And it's not magic. The only reason we knew to buy right here was because there was past price action right there. And see how there's price action right there. And if you run back over, there's a lot of price action around that $50 level. So all that means is that a whole bunch of traders have limit orders there. So just jump on the train and do the same thing and put a limit order there for $50. And when it crosses that line, it's very likely to bounce from there. And you know what? If it doesn't, you have a fundamental understanding of this to where you're excited that it goes lower. And now you're hoping it hits the 200-day moving average. And see the next one down there, the next limit order, $44. A lot of price action along $44. So that's where everyone's got their limit order set. So jump on the train, do the same thing. It kind of becomes a self-fulfilling prophecy, And, as it gets cheaper, buy more, run the rip up, and then sell.
I like how you explain it. It does look very clear when you lay it out that way. So while we're on the energy side, I want to take a look over at oil and natural gas as well. I think for oil, last time we were talking, that was in the more hated category that people maybe should be taking a look at. So any further thoughts you'd share on oil and natural gas?
Okay, here's oil. Long term, oil's just been in a downtrend. Right? We had a level of around $65 that, forever we were wondering, is that ever going to be broken? It was. Now we kind of have this floor of around $55. And, according to Doomberg, he says that that's kind of what they calculate as their equilibrium price of oil. So maybe fundamentally that's kind of where it should be. Looks to me like it's going lower. We've got all the moving averages in the wrong order for a bullish chart. We've got the 20-day, then the 50, then the 200 stacked on top of each other. So there's a lot of resistance that it's got to break through in order to start a bullish trend. So one of the easiest ways I think to bet on oil here is this ETF XLE. Right? I mean, you can get into the weeds and, you can bet on individual companies if you want, but a real quick, easy way to do it is this ETF. And I just put something out in my newsletter about this. So this 10%, 20%, 30%, and 40%. If I had no position in oil and I wanted to establish a position because I'm very bullish on oil over the next 5 years, but I'm kind of bearish on it over the next, few months. And I think it's very likely that we could get down and hit some of these levels. So let's say you wanted to bet 100 grand on oil. I would do $10,000 right here on this XLE ETF when it hits 44.62. And then I would do another 20%. I would bet 20 grand when it hits 43.50. And then I would bet another 30 grand when it hits 42.50. And then I would bet my final position, my final 40 grand when it gets down here to 40.75. And all that is that's just going back to price action back here. You'll see that a lot of these line up with moving averages, right? And you're just trying to catch those levels that everyone has their limit orders set at. When the sector does reverse, and I think you need a 5-year time frame on this thing. But when it reverses, you get in the black very quick. And so I'm very bullish on oil. Although in the short term, I think we're going to see a pullback, and the chart is showing exactly that.
Well, very, very actionable there. So thank you for sharing that. And as we're getting toward the end here, I already asked you my fun question about top performing asset of 2026, but I have another fun question, which is best advice for investors looking forward to the new year.
Best advice for new investors looking forward to the new year.
Doesn't have to be new investors. Could be just investors.
Just investors in general. I would say probably don't trade on emotion. I would say look at the fundamental case for whatever it is that you're betting on. Look at the fundamental case, understand the fundamental case, and then execute on the technicals, right? So the fundamentals kind of tell you what to buy, and then the technicals tell you when to buy and when to sell it, right? So, for example, with gold, all right, write down your thesis and write down your thesis on, maybe make this as a New Year's resolution. Like, okay, I'm going to write down my thesis for every commodity that I'm invested in and for every company that I'm invested in. And so by doing that, what you do is you have a fundamental understanding of the bet that you're placing. And then by writing down your thesis for each company, you have a fundamental, thesis as to, why you own it. And most importantly, what are some indicators? What are some things that could happen that would cause you to sell it? Okay. So for gold, for example, I'm invested in gold because governments can't help themselves and they continue to print more currency. There is more debt in the system than there is currency to pay it back. As long as that is the case, I will be an investor in gold, right? I will not become an investor in gold as soon as governments start balancing their budget. I will, as soon as I can trade so many ounces of gold for 1 3-bedroom, 2-bathroom house, then I will make that trade. Have a thesis for each one of these commodities or sectors that you're invested in, and also have a thesis, for each company that you're invested in. And most importantly, what would be the triggers for when you sell?
I think that's a great exercise for people to do if they haven't already. So thank you for sharing that. And before I let you go, any final thoughts? Usually we also mention your technical analysis course. We will have the link in the video description for anyone who wants to take a look at that. But yes, any final thoughts you would share?
The technical analysis series, basically what we do is we take the fear out of buying and selling. So, like I said, the fundamentals tell you what to buy and what to sell. And then the technicals, the charts, they tell you when to do that. So I created my technical analysis series to give everyday do-it-yourself investors the same playbook that I use in my own portfolio. It's a very simple approach for reading charts, trend lines, moving averages, Fibonacci, volume, and price action. So you get real examples and a system that you can apply immediately. It's a video series. The first 30 minutes are just showing you mouse click by mouse click how to set up your charts exactly like you saw here, or tailored to whatever you want. So the next 2.5 hours after that are going over indicators and patterns that let you know if it's a good time to buy, a good time to sell, or most of the time it's a good time to do nothing, to just wait, right? And if you want to sharpen your edge and navigate volatility, and especially in commodities markets, then you can do so with confidence. And this series gives you the tools to do that. So thank you for sharing that, Charlotte. I appreciate it.
Of course. And as I mentioned, we'll have the link in the video description for people to check it out. Thank you so much for coming on to go over all these different commodities and markets looking into 2026. I'm sure we'll have you back to review how things are panning out.
Well, thank you, Charlotte. I always enjoy these.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Steve Barton with In It to Win It.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.